We're going to be talking about out of the money contracts, into the money contracts, expiration dates. So you guys should definitely stay tuned if you guys want to learn how to make money in seconds and minutes. Hey, what's up guys? Welcome back to my channel. My name's Smay, and in this video we have a super special video for you guys. We're going to be going into how to trade options opposed to stocks. We're going to go into how they're different. We're going to go into how you can make money with options. We're going to go into the risk factors in trading options. You guys can decide if you guys want to trade options or not. I guess you guys can decide at the end of this video. And if you guys haven't subscribed already, please subscribe guys. Smash the like button if you guys like my videos. It helps me a lot. You guys have no idea how much it helps me. So thank you guys. And without further ado, let's get into this video. So the first thing you guys have to know about options is that you guys buy and sell contracts and not stocks. Generally, when we think of the stock market, we think of buying shares and buying stocks of a company. Now with options, you buy a contract representing 100 shares. If executed, the option contracts can allow you to buy 100 shares of a stock at a certain price. And within these contracts, there's going to be calls and there's going to be puts. For calls, you're betting the stock will go up. So if you buy a call, you want to see the stock go up. So you will make money based on the appreciation of the value of your contract. Within buying and selling contracts, we're going to have to talk about how they expire. So with stocks, you guys can hold the stock forever. You guys can hold it and pass it down to your kids, your grandkids. But with contracts, they do have an expiration date. So let's say you buy a contract for a week from now, a week out from now, 2 weeks out from now. When that date, generally Friday at the end of the week, when that contract expires, you either have to execute it by buying 100 shares of that stock that you bought the contract for, or you guys can sell the contract before the expiration date, which is generally what I do, and we can get into that later in the video. That goes along with profiting and how to make money from contracts. Now that we've understand expiration date and that you guys buy contracts and not stocks, we're gonna now talk about being in and out of the money for contracts. So for example, you guys can buy a contract that's in the money, and you guys can buy a contract that's out of the money. Generally speaking, we want to buy contracts that are in the money already because it's safer, but out of the money contracts can also make you money. It's just a little more risky. We can go into the specifics of that maybe in another video, but in this video, I'm gonna give you guys the general idea of in the money and out of the money. So let's say Tesla is at, I'm gonna say $500, right? As of right now, it's like around $550, but for simplicity's purposes, we're gonna say Tesla's at $500, right? Now, if we buy a call contract, we want it to go up, right? So everything from 500 and up, 501, 502 is gonna be in the money if it's a call contract, right? So if you buy a call contract, you want the stock to go up. So everything after 500 is in the money, right? If you buy a call contract for a Tesla in the same situation at 500 and Tesla goes down, now you're out of the money. So let's say it goes down to 490, right? Now you're out of the money. Now that we've talked about calls a lot, I'm gonna move into puts now. Puts is basically the exact opposite. So I'm gonna slow it down for you guys. Puts is basically you're betting the stock goes down. Now, I don't know if you guys know about shorting a stock or that you can even profit from when a stock goes down. In the stock market, if you guys short a stock, you can just bet that the stock is gonna go down. You sell the stock at a higher price and buy and cover at a lower price, so you make the profit of, I guess, the drop. But in contracts, you would have to buy a put. A put is basically the same as shorting. You're betting the stock will go down. As we mentioned earlier, in the money and out of the money also applies for puts. So for example, with Tesla, let's go back to the 500 example, right? We're at 500, right? And we want the stock to go down to make money as a put. Or we think the stock is going to go down and we buy a put at 500. Now you're going to be in the money if the stock goes down. So if it goes to 490, like we said, it's going to be in the money for you. And if the stock goes up, if the Tesla stock goes to 510, now you're out of the money as a put contract. So the two things that we really have to understand in options trading is buying a call and buying a put. Now there's so much more contracts that and strategies that you guys can use, like spreads and things, but we can get into that in another video. This is just going to be a simple, hardcore, essentials information on options. If you guys are liking this video so far, smash the like button for me. It helps me push this video out to more people and help more people. So thank you guys. Since we've now talked about expiration date, buying contracts, and in and out of the money contracts, calls and puts, now we're gonna go into the juices of how you make your money in options. Before I talk about how to make money, I want to let you guys know that options is very risky, high risk, high rewards type of trading. It is not investing, it is trading. Now you can argue that swing trading option contracts could be investing, but that's your argument. You guys let me know in the comment section what you guys think of options trading. But I believe that options trading is generally used for trading. In trading options, you're gonna be making money when you buy a low price contract or a contract for whatever price. And when that stock goes in the direction that you want, whether that be a call or a put, you make money based on the appreciation of your contract. So your contract's price will go up if the stock is going in the right direction. So I'm gonna give you an example. You buy a call for that same Tesla. So it's at 500, right? Now, Tesla contracts are extremely expensive. You guys can look into that. But I'm gonna make it simple. This is not accurate to Tesla's actual options price, but I'm gonna make it very simple for you guys to understand. When you buy a call for Tesla at, let's say, 500, a strike price is the price that you started. So strike price determines whether you're gonna be in the money or out of the money, right? So strike price is where you're buying the contract at $500. Now you buy a call, so you want the stock to go up. Once this stock goes up, let's say $1, $2 to 501, $502, you're gonna be making money based on the contract's appreciation. So when that Tesla stock goes up, your contract's value goes up because now you'll be able to, if executed, you'll be able to buy Tesla stock at $500. Tesla is at 520 and you bought at 500, the strike price of 500. You can technically execute the contract to buy 100 shares of Tesla at $500. That's how contracts work. Contracts is basically giving you the option to buy 100 shares of an individual stock at the strike price. So like we said, we bought Tesla at 500 strike price, a call contract, so we want it to go up. Now, like I said, you can make money by either buying 100 shares of Tesla at the strike price, or you can sell the contract for the higher value, right? So it's buy low, sell high. Basic trading, basic making money, basic flipping, right? So now the question is, how much money can you make with options, right? Now that's the really enticing part about options. Options profiting is exponential. And what does that mean? Now, if you guys know, exponents don't multiply evenly, right? They're not proportional. I like to use proportional and exponential to describe options, right? So stocks, you buy one stock, and if the stock goes up $1, you make $1 profit, right? That's proportional. You buy two stocks, you make $2 if it moves that dollar, right? You guys are getting it, right? With options, if a stock moves $1, you'll make whatever the delta is. More specifically, when a stock moves $1, how much money do you make? For example, with a delta of 0.5, if a stock moves $1, you will make $50. You guys can see here that if a stock moves $1 within a minute, you guys can make $50 in a minute. Now, that's just super simplifying things. There are other Greek symbols that you guys should know that I will get into in another video. If you guys want to know about gamma, theta, delta, and vega, then you guys should definitely let me know. I'll make the videos for you guys if you guys want it. Knowing how the price of a contract can increase and how exponentially it can increase can really show you how you can make money fast and how you can turn your money 2 times, 3 times, 4 times within days and within weeks. Me personally, I like to trade option contracts that are short term, and I like to day trade them. So I will buy same day and sell same day. And within minutes, within hours, I will be making at least 5% of my money. Generally, if I keep that consistently, 5-10% every day, that will add up, and for the week will be up maybe 25-50%, you know? And obviously stocks, you'll be long-term investing, you'll be looking at the fundamentals of the company. But with options, you guys really have to get into technical analysis. Trading options requires knowledge on graphs, requires knowledge on the RSI, MACD, volume, SMA, EMA line. If you guys want to get into that, I have a video. I made a very detailed video on the differences between the graphs and you guys can always check it out, what the graphs mean, and you guys can always come back and watch this video again after you guys have understand all your graphs and how you can utilize them to trade in the stock market. And with that, guys, I wish you guys good luck in trading options and learning about options. Thank you guys so much for watching. I appreciate the viewership, and I'll catch you guys next time. Peace out.